Okay, so you're ready to start investing. Awesome. But then comes that huge, overwhelming question. Where in the world do you put your money? There are literally thousands of options out there, and it's so easy to just freeze up. So let's just cut through all of that noise and focus on the one single principle that every new investor absolutely needs to understand. Let's be real for a second. The idea of finding that one perfect stock, that one magic investment, and just going all in, it's super tempting, right? We all hear those crazy stories. We see the headlines about people becoming millionaires overnight. But is that a real strategy? Or is it basically just buying a lottery ticket and hoping for the best? To figure that out, let's do a quick, rapid-fire look at some of the most popular all-in ideas people have. We're going to see exactly what happens when you decide to put all of your eggs in just one basket.
First up, the big one, crypto, the digital gold rush. You've seen the charts for Bitcoin, right? Just shooting straight for the moon. It is almost impossible not to fantasize about putting your money in and just riding that rocket ship all the way to an early retirement. So yeah, why not go all in?
Well, here's the catch. You know that same energy that creates those mind-blowing highs? It can also cause some absolutely terrifying lows. The biggest issue with betting everything on Bitcoin comes down to just one thing. It is extremely volatile. To put it simply, what looks like a life-changing gain on a Monday could be completely gone by Tuesday. And that, my friends, is not an investment strategy. That's a high-stakes gamble with your entire life savings.
All right, so crypto is a bit of a roller coaster. Let's move to something way more tangible. Bricks and mortar, real estate. People have been building fortunes with property for centuries. It feels solid, you can touch it, it feels dependable. I mean, what could possibly go wrong?
But here's the thing about a house. It isn't some magic money-printing machine. It only makes you money when you have someone living there, paying you rent. An empty house isn't just sitting there doing nothing, it's actually a pretty big problem.
Because if you can't find tenants, that solid investment of yours suddenly starts bleeding cash. You're still paying for taxes, for maintenance, for the mortgage. All of a sudden, your big investment is costing you money every single month.
Okay, so individual assets like crypto and real estate, they've got their own unique risks. Got it. So what about the classic, the stock market? This is where millions of people invest for their future, so it's got to be the safest all-in bet, right?
Well, even the mighty stock market has a major weakness. See, markets move in cycles, and sometimes that whole cycle just decides to head south, fast. And here's the really crucial part. Even if you own 100 different stocks, that can't protect you if the entire market crashes. A single big economic event can pull everything down with it, and your all-in strategy is suddenly in massive, massive trouble.
So if every single option has this huge potential downside, what on earth are you supposed to do? This is the point where we need to stop thinking about finding the one perfect investment and start thinking about a much, much more powerful idea.
And it's so easy to feel that way, isn't it? Bitcoin's too crazy, real estate might not have tenants, and the whole stock market could just fall apart. It kind of feels like you're in a lose-lose situation. But that is not the takeaway here, not at all.
The answer isn't to just pick one of these and cross your fingers. And the secret isn't about avoiding risk completely, because let's face it, that's impossible. It's about managing it intelligently.
This is it. This is the solution. Instead of trying to bet on one horse to win the race, you actually spread your bets across the entire field. That way, the weakness in one area gets balanced out by the strength in another.
This whole idea has a name. It's called a diversified portfolio. It's a strategy where you hold a whole variety of different assets, some stocks, some bonds, maybe a little real estate, and yeah, maybe even a tiny slice of crypto. It ensures that a storm in one market doesn't sink your entire ship.
So look, if you only remember one thing from all of this, let it be this simple, kind of counterintuitive but incredibly powerful rule for starting your investment journey.
That's it. Don't put all your eggs in one basket. Instead, go out and buy a whole lot of different baskets. This is the core principle of diversification, and it's your absolute best defense against the ups and downs that are just unavoidable in any single market. And that's really the question I want to leave you with. Your perfect mix of investments is going to be totally unique. It depends on your age, your goals, how comfortable you are with risk. Your journey as an investor, it doesn't start by finding one magic bullet. It starts by figuring out what your personal everything actually looks like.